Hi, this is Charles Pope with Grice, Pope and Associates, otherwise known as GPA. And when we founded the company years ago, we did that not only for our name's sake, but we want everybody to have a 4.0 GPA. So anyway, thank you for joining us. Today's Medical Practice 101. So today's web clinic is designed to help all healthcare stakeholders, their accountants, CPAs, as well as attorneys and other stakeholders in the financing needs for medical practices. And this could be for small amounts or very large amounts. And GPA handles single physicians all the way to acute care centers or hospitals. And today we want to give you the thought, theory, and insights of medical practice financing. Most physicians are very, very good at what they do, and not necessarily, perhaps I shouldn't say this, as good possibly to finance all this somewhere. So what we want to do is, more than just going to the bank, what GPA does is help you see your options. It might be a bank, or it might be some alternate lending sources, or my favorite is self-funding. And our guest, and let me introduce my partners on board today, is, well, I'll get to that page, but we're going to talk about our presenters, give you a quick preference, our decreasing revenue in the face of demands for improved patient outcomes and payer systems, and how many of you deal with your payer systems right now as they cut your revenues. And we have a very discerning patient population nowadays. What makes up a funding denial, and how to turn that funding denial into funding approval and get more cash. And Nate Hollander is with us. Nate, are you with me?
Yes, I am.
Okay, excellent. Thank you. And I can hear you loud and clear. Is bringing us one, and I think if he's got time, we're going to ask him to review a second revenue enhancement. And then questions and answers in your plan forward. And this is Greg Grice. Greg, are you on?
I am on. Hello, everyone.
Okay, excellent. That's me. Between Greg and I, we have over 75 years of experience in putting transactions together and funding transactions. As you can see, over the past few decades, we've funded in excess of $453 million from institutional funding. And I might stop and tell you that the institutional funding in our banks are our best friends. They help us and guide us, and we may have one or two bankers in the audience today. And just want you guys to know we love you. But banks are limited to some of their control, which hopefully might be relaxed a little bit as we move forward. Anyway, better not get into politics. But anyway, non-traditional funding. And non-traditional funding could be hedge funds, investment groups, partnerships, bringing partners in. And notice on the $192 million, I put $192 million plus, and because it just keeps getting better. The percentage of people using revenue enhancements or practices is just growing. It's increasing at an increasing rate. We have some publications which we'll share with you. You can always go to our website, and that's just one of them. What we're going to talk about today in a really brief 30,000-foot view, loan mechanics. But the 3 C's of lending, and when I presented this before, people said, oh, 3 C's of lending, there's 2 C's right there. But this is like early on in banking, when one is set down and tried to comprehend how to lend money at what's best for the customer and what's best for the bank. The 3 C's is traditionally character, collateral, and capacity to repay. And of course I've got collateral there. But character is most importantly. So we need people with reasonable credit or proof that they meet their obligations and have tried. And then collateral is, if it is a collateral loan, and nowadays there are credit score driven unsecured lines and other things, and accounts receivable, and in some cases collateral doesn't matter. The two I would say, and I didn't put the most important C on here, which we're going to talk quite a bit about today, is capacity to repay. Capacity to repay, I mean, a bank or any lender cannot lend you money unless he stands a reasonable chance of getting paid back. And I don't know if y'all have heard this or not. I've been hearing it ever since I've been in finance. Mark Twain's quote, return on your investment is not nearly as important as return of your investment. And how you return your investment to the bank is by having a source of cash flow. So that's your cash flow right there. Practice valuation, we're not going to get into that much, except to the extent that the revenue of a practice does help you with your valuation. And there's your payback. And then we're going to ask Nate to discuss implementation of a revenue enhancement. And next is that we're not the only ones that say this. And Greg and I heard about this, not heard about it, but it became obvious when there was a viral video. Mr. David Gans. David Gans is one of the higher-ups in the Medical Group Management Association. And he's got, what is it, Greg, a 7-minute video with Medscape where it's questions and answers. And, you know, this is how he summarized it in 2012. And here it is after the 2016 conference, and it's the same things. Payers are demanding better outcomes, practices to be more productive. The patient population is needier than ever. And we're going to ask Nate to discuss the chronic disease management because he offers services like that. And then revenue enhancements are essential, and I will show you why. Funding, approval, or denial of your loan. So I've tried to make it very simple. If you apply for $1 million loan, Greg, are you with me?
Yeah, I'm here.
Okay, good. All right, so I just want to make sure I'm not having this whole conversation at the end, nobody's there. So
We are all here.
yeah, that's happened before. So let me see. I'm just taking a look. We've got physicians and medical practice managers throughout the country with us, and I wanted to thank those people from California. We've got a couple people from California, oh my, and somebody from North Dakota. So thank you for joining us. And we've got quite a few from South Florida, which is great, because we also have one of our banker friends from Ocean Bank is joining us. I asked him to please join in to just be critical. I hope he's not too critical. But anyway, the debt service coverage ratio is a key ratio when you're borrowing money. And to be demonstrative, if your loan size is $1 million, average one provider, a term loan of $1 million for 10 years, fixed rate at 4.25%, and your monthly payment would be $10,244. Without the revenue enhancement on this, you can see that as it is, which I've put in red, your current of $12,000 if your cash available for debt service is $12,000, your debt service coverage ratio, which is simply this divided into that, is 1.17. SBA requirements is 1.2, and they're hard and fast. Now, there are extenuating circumstances, but that's kind of like really at the bottom line, at the bottom margin. So if you add one service, and in our opinion, from what Greg and I have seen and working with Nate, it's a pretty simple process. Not only that, but your patients need it. You can bump that up from 1.17 loan denial to loan approval. And this just shows you how for each practice, each service. So how does that relate? If you had this and that was your income and you say, I don't need ancillary services, I'd just like to refer out. I'll refer them, and every time you refer a patient out, you're probably just seeing $1,000 go right out the door, minimally, and probably no more, which Nate will get into with other billings. So given that, how does that relate to cash in your pocket? And that would be right here. So with one service, even if they did approve you, you're only going to be able to borrow about $975,000, which then closing costs, the amount of money you need, whether you're going to acquire long-term equipment or not, it's just waning. So if you bump it up to one service, you're going to put minimally an extra 100 grand in your pocket net. So that could cover some, not that your closing costs are going to be that high, but that will cover closing costs and reserves. And reserves is very important to you as well. There's a whole lot of when you'll make appointments with us and we come see you or we have a conference, You not only need good credit, but you need reserves. We need to make sure you're successful. And that's what this whole thing's about. We want successes. We're not going to lend you money. And I might say, in all the years I've been lending money, I had to charge off a $15,000 loan back in 1981. But the hundreds of millions of dollars, that's it. And I shouldn't even mention that one. But anyway, so that being said, to introduce one ancillary service is U.S. Allergy. I'm going to turn this over to Nate Hollander, and he's going to take it from there and tell you the ease and how lucrative this might be. Nate?
Yeah, thank you very much, Chuck. And I thank everybody for being with this webinar today and taking the time. I know everybody's time is precious. What Chuck is talking about, quite honestly, from 75 years experience that GPA as a premier lender has in the arena, in the industry, finance industry, we have decided, American Imaging and U.S. Allergy, our two companies, have decided to partner up with them. We are a family business. We are over 30 some odd years in business, and it happens to be my daughter's son, myself, and the other partner, healthcare attorney. Everything that we do for doctors, we do it on a national basis. We work with over 150 medical practices, doctors all over the country, and we're strictly mobile. So we have nurses and technicians that go all over the country, either by car or fly, and we have over 30 different techs and then nurses and equipment to go all over. One of the things we do is allergy testing, and in a little bit I'll explain about the nerve conduction testing. Everything we do in 30 years, we've never asked a doctor for a penny, a dollar, $1 million. Ours is all strictly sources of income for the practice and also excellent medical results. And one of the reasons we partnered up with GPA, Chuck and Greg, is because of the fact we together sort of put our heads together, come up with an innovative, excellent way for you to go out and get the loans through GPA, yet how do we answer the question, more importantly, of paying for some of the debt service? And that's where, if in doing the testing in your office, not only can we address the issue of paying for the debt service, but at the same time you're getting excellent medical results in the patient at the convenience of your office. And we think it's innovative from the point that I don't think you're going to find too many other places, if at all, where people with the experience of GPA, Chuck and Greg, in helping to be the liaison ambassadors to get you the loans, but also where instead of letting you just sort of hang out to dry, we're together sort of holding hands so to show you answers of how you can pay the debt service. And one of them is income from the allergy testing. So we have nurses that come in your office, super nice nurses, very good at what they do, and they will do allergy testing, which is a scratch test, non-invasive on the surface, and that is, we do 90 tests. About 20 of them are for food allergies, and about 70 others are for environmental. And then you can get, we do with that, we piggyback an asthma test, pulmonary function, with the allergy, as it's related very much asthma and allergies together. And then you get reports from our board-certified allergist and pulmonologist. And then when you get the reports, you can sit with the patients and going over, bill out for follow-up consult. Legally, we can pay you $1,000 a day, a fair market lease, a safe harbor lease, for a full day of testing. It's a supervisory lease, and so we pay for the $1,000 for the lease, and then you're also making the income on going over the reports as a consult with the patient. So between the lease payment and the consults, you're going to be making $1,500 to $2,000 a day, and a full day is 10 patients. And we bill out to the patient's insurances. On the same token, the supporting staff in your office, gals or guys, do none of the paperwork. We do all the authorization, pre-authorization with insurance. We do all the booking of the patients. We can do our testing 6 days a week at your convenience, Monday through Saturday, any day, as long as you're open. And we only need a small room to work in. And there's no obligation. I would just say to you, if you tried it one time, you'll be extremely impressed with the nurses, state-of-the-art equipment, and we make direct deposit to your bank account. after the testing, and then you get the results within 48, 72 hours from our reading doctors, interpretations, and you can sit with the patient and going over and then bill out, so you're making $1,500, $2,000 a day. And pretty much you can rule out anything, as all over the country. Obviously, we have wheezing and coughing and itching and sneezing, eye irritation, any kinds of symptoms, pretty much. And we'll come in and do the testing right in your office. Besides that source of income, if and when which patients need, this is on the on-site allergy testing. You will retain the patients because of the fact that you won't have to send them out to either a specialist or to a hospital, and you don't lose the patient, as you know, to a specialist who might never send them back. They stay in your office. We need one little room to work in. Patient is happy that way is a win. You're making the source of income, $1,500, $2,000 that way, and getting excellent medical results. On top of it, if you did decide to do treatment, immunotherapy on the patients, there's anywhere from at least $2,000 to $4,000 increase on these monies per patient, as they usually stay on a year or 2 years. You're getting paid for all of the monitoring of the patient with office visits. That's like $500 extra per year. You're getting paid for giving the shots in the office. That's another $500. And then you're getting paid directly from the insurance company for doing the therapy, immune therapy on the patient. So initially you're making $1,500 to $2,000 on the testing, and you're going to be making anywhere from $1,500, $2,000 to $3,000, $4,000 for each and every patient. And most of them stay on 2, 3, 4 years on the treatment. So, and that of course ties right back to helping to pay for the debt service, as Chuck said, and that's where we've partnered up together. As we see there, testing and treatment can go over 2 years, 3 years, as we say. The patients themselves will receive quality care, and they will refer friends to them. And like we say, we do all of the pre-authorization, scheduling of the patients. You just give us a convenient day when we come out to do the testing. That's an overview with the allergy testing, and if you try it one time, no obligation, you'll be very impressed.
Nate, it looks like we have time for you to do one more ancillary service, or
Sure.
one more revenue enhancement. Would you like to do nerve conduction?
Sure, sounds great, Chuck.
Okay, there we go.
So as Chuck said, we for many years have done, as I say, over 30 years with the allergy testing and neurological EMG testing. So as far as this goes, we have technicians who, again, we do it anywhere in the country. They drive or fly anywhere, urban area, rural area, for allergy testing or nerve conduction. And this is another source of income for your practice. We do nerve conduction, EMG testing, spinal ultrasound, as far as that goes. Most any diagnosis applies, mostly like allergy. You can use rule out as one of the rule out quite anything here, kind of thing, with neuropathy, reticulitis, diabetes, heart disease, on. And I think Chuck addressed some of those when he was talking about with the finance. So our techs go out to your office and do the testing on the patient. It's non-invasive. And again, we do all the pre-authorization, scheduling the patients. Legally, again, we can pay you $1,000 under a fair market lease, and that's the same as allergy for each day that we go out. So if it's a smaller practice, whether we go out once a month, every other month, what have you, if it's a bigger practice, whether we go out once a week, twice a week, what have you, and legally we can pay for each full day of testing as a supervisory lease. Then our techs do the testing. Again, we do all the paperwork, pre-authorization, scheduling. Your office staff does not have to handle any of that. And then from there, you'll get the results back from our board-certified neurologist on the neurological and our radiologist on the radiology side, ultrasound side. Again, you can sit with the patient, go over the reports, bill out for follow-up consult. So with the neurological ultrasound testing, you'll make $1,500 to $2,000. And again, you won't have to have the patient go to a hospital or specialist. You don't have to lose the patient to a specialist who might not send them back. Again, this is a source of income. And between this and the allergy testing, if it doesn't pay for the whole debt service, depending amount of your loan, it'll definitely pay for a large chunk of it. You'll have some excellent documentation on the patients. It'll also give you a blueprint for you as far as a plan of treatment on the patients. Or if you get involved with physical therapy, we can give you some of the exercises specific or therapies that you should do specific on each patient as we get the test results. So this is definitely state-of-the-art equipment, super nice technicians, and again, we just need one small room to work in, and we're all self-sufficient. And again, we do it Monday through Saturday, any day of the week, depending on what you have in your office and when you're open. So again, we're addressing those issues, and again, this is why we partnered up with GPA. We feel that we can address both ends, where Greg and Chuck with GPA have 75 years of experience in helping you as far as financing and contacts. And from our end, we have over 30 years in working with doctors, and we work with over 150 different practices throughout the country as far as doing testing and addressing sources of income and excellent medical results. You don't have to buy any equipment or pay us any money, anything like that. So these are the two modalities of choice in what we do. Chuck, I'll turn it back to you.
Okay, thanks so much, Nate. Greg, does it look like we've got questions coming in?
Yeah, we do.
Okay, well, we're not ready yet. Let me just... Yeah,
well, I know we promised to keep this at about a 30 to 35-minute webinar so that these doctors, we want to obviously respect every second of their time.
Okay. Give me 7 minutes, or that gives us 7 minutes. So quickly, the conclusion, to me it seems pretty simple, is your additional revenue will bring your debt service coverage ratio into a loan approval instead of denial. The additional cash is available for your growth and debt service. Also, if you say, Greg, I don't want to borrow money, I just want to sell my practice, which I think a lot of doctors are getting over that now, and they realize they can't just turn tail and run. But earlier debt retirement and increased value for your business. What that means is, so here we go, what Nate has presented to you. And as we go through this, please contact us and we will set up an appointment. We can put you right through to Nate. That it's no cost to implement. You comply with payer systems. And I've got to say, and I haven't wanted, I've been invited into, but I have not sat in with auditors from Medicare and Medicaid. But they go in and some of the RAC audits and whatnot, we're familiar with that. Actually, have some alliances in the RAC protection area. Is they want to say, well, how are you helping the patients? You're billing for this, how are you helping them? But we can increase patient volume instead of sending it all out. There's no drain on the staff, as Nate said, and he can expound on that. And now, you said you had some questions, Greg?
Yeah, so Chuck, this one is for you. Basically, how long does a physician have to show the enhanced revenue income before the bank approves it or recognizes it for a loan app?
That's a great question. Well, the good news is we're not dealing with Fannie Mae or Freddie Mac or residential type of lenders, so there's no rules. There are rules and guidelines and a big fat book when you deal with the SBA. And sometimes on term loans, they want to gravitate towards an SBA. That's from $1 million to $2 million, and then from $2 million to $5 million, we have to get an SBIC involved, and that's also a federal loan. But what I would put it in, if it's after a year, we're going to, if you utilize it for a year, and again, I don't want to take up all your time on this one question, but it's a great question, but it's a big question. And lending is such a thing as compensating factors. So maybe you have a coverage ratio of 1.17, but you're introducing these ancillary services and you have a great plan for the future, you have everything lined up, then it's a compensating factor, as are reserves. Your reserves are a compensating factor, your location, so there's many things, and the good news is this is not as cut and dried, particularly if you're dealing with private capital. It's not as cut and dried as some lenders are. So to answer your question directly, there's almost not a direct answer, but I would say the plan has to be in place. You just can't say you're using it. We have to demonstrate some income through some revenue cycles. So I hope that is at least initially an answer, Craig.
Okay. And another is the revenue that we're talking about, and I'm not sure if this was better for you or Nate, but is revenue based on per provider or per practice that we're talking about?
Nate, you want to take that one?
Yeah, you said what was the end of that?
Yeah, well, I mean,
provider?
when we're talking about 2,000 or 5,000,
Right.
are we
Right.
talking about, we've got everywhere from solo practices to large groups, and they just
Oh,
want
I
to
see.
confirm, is it per provider or
Yeah.
per practice?
It can be per provider. If the ordering doctor. So even so, it might be a group of 4. If each doctor, say, had a full day of testing, then legally we can pay per provider. If the whole group has a day of 1, then we would just pay to the group legally. But otherwise, if, say, 3 or 4 doctors are together and they each provide a day of testing, then legally each doctor, because each one's a supervisoring doctor, and it's a supervisoring lease. So it can be per provider. Doesn't have to be just for the group. But
And I
that's
guess
for each full day of testing.
another question that kind of ties into that is how many patients, what's the number of patients needed for a day of testing?
Yeah, for allergy, for nerve conduction, we need a minimum of at least, say, 6 patients. And for allergy, we need a minimum of at least 9 to 10 patients to do the testing. And you usually need a little buffer, 1 or 2, because you always have 1 or 2 patients either no-show or something like that.
And I know we're dealing nationwide. Can you get into, at least on broad brushstrokes, the insurance that you do take?
Yeah, sure. Overall, all your majors like Blue Cross, Aetna, Cigna, United Health, most PPOs, HMOs, as long as they give us pre-authorization, union plans, most workers' comp, most no-fault auto insurance, lien letters with the attorneys, and then just to depend on what area of the country, with Kaiser or GHI or Empire or other areas, but most Humana, most major plans and stuff.
And how long does it take if they want to move forward with one or both? Does one a quicker implementation than the other, or what's the fastest way some could get started?
Yeah, the fastest way is we get you the ordering form. You make copies of the ordering forms where you give us the demographics and insurance on the patient and whatever symptoms the patient has. We'll quickly do the pre-authorization. We have like 4 girls, all they do is pre-authorization. We quickly will do that, and then we'll quickly, once you send us the ordering forms, within a day or 2, we'll call you. We'll ask you what's the most convenient day of the week, Monday through Saturday, and we'll look to set it up over the next week or 2 from the time you send in the ordering forms.
And their revenue is going to show up when it gets wired, the time basically from that point, once they've signed and the girls have done their pre-auth and scheduled, is it like a 30-day?
No, we'll go out and do the testing, and then within a couple of days, you either decide that you want direct deposit. After we do the testing, we can either do direct deposit within a couple of days right to your bank account, or if you prefer a hard check mailed to you, we can do either way. But we'll do it within 2 or 4 days right after the testing. There's no 30-day wait or anything like that for us to pay you.
Perfect. And just to confirm, yeah.
I wanted to thank our banker for being on board, but I just heard from the head of the healthcare division of Ocean Bank. He's watching, he's joining us, and it really is great to have strong alliances like we have with Ocean Bank, but with our dialogue about how long before you can count the money, he just texted me and he said that the bank can use it right away if proven to continue. That's fantastic, and that's why strong alliances are so important in our relationship with our lenders, like Ocean Bank. But I wanted to ask you, Nate, as I understand it, there's no contract for them to try it out, and then after they try it out, they'll love it and they'll see the revenue, and then what's involved, and I assume that's what our banker is talking about, is that what evidence will they have that it will continue? What will they be able to show the bank, Nate, that says, hey, we're going to continue?
Yeah, there's a lease involved, and as far as that goes, it's a 1-year lease, but it has a 30-day out at any time. Strictly a tool legally to get money to a doctor's practice, And again, it's a little bit for use of the weighing room, exam room, etc., but the bulk of the $1,000 lease is a supervisory lease. That means that the ordering doctor overseeing about the testing. So as far as that goes, we're in the business of making doctors happy, and I'm more than urged that if they try it one time, and one time only, no obligation, they're going to be very impressed with the technician, nurses, state-of-the-art equipment. And again, we can make direct deposit a couple of days after testing, or send them a check, and the lease itself, there's a 30-day out anytime if ever they want it. And more importantly, if ever they didn't want to test, if they don't send us patients, then we cannot test, obviously. We have to have patients to test. So that's a
Well, and I guess a big part of that is that just reiterating that and taking away any fear, as you'll say in FUD, fear, uncertainty, or doubt about the program, is emphasizing that there is no disruption of the office workflow. That really, it's not as if the doctors need to be trained, the nurses need to be trained. This is all turnkey from the beginning.
Yep, self-sufficient on our part. We do everything. Yep, we do all the paperwork, we do all the testing and everything. That's correct, right? So
turnover doesn't matter. Nurses train. It's not as if you're going to have to put somebody back through a 6-week training course. This is all done. You cover everything.
Right.
Which is critical. And then I guess, Chuck, one last question that we had was, could you further define what a non-traditional loan is?
Well, the non-traditional, the primo and usually the best rates are from your commercial banks. And as well, to get a plug-in for the banks, like Ocean Bank, they've been ever so helpful in guiding us and showing us what state-of-the-art current practices are and what, because not all banks, and you want to see, if you go to your bank, do they have a healthcare division? Are they just the same old me too? But like I know Ocean Bank has a healthcare division, and they're all about medical practices. So that's what we get from the banks. However, there are other companies, and of course everybody knows about GE Capital and but we have hedge funds. We can package loans, so to speak, or we get a nice sizable loan, or if we have a syndication or an acquisition of medical practice hedge funds. Also, I want to mention we're working with crowdfunding. So we have an alliance who is putting together a sizable multi-million-dollar loan fund for crowdfunding. And then let me say this, that sometimes it's not just one source or the other. It's not like the bank, and if the bank doesn't like you, you go somewhere else. Maybe the bank can do it, finance you, but they need a little margin. So say you are acquiring other practices and they want to see that you've got some equity into it. Well, we may be able to go out and get some, a secondary source of capital to either participate in the revenue, some type of, we don't have a Series 7 license, but we have alliances who do, and work with healthcare attorneys that can do it for us as well. It's so at a cursory level. The sky's the limit. I might say this, and I've been quoted on this before. There's never a shortage of funds available. There's only a shortage of bankable deals. And what makes a deal bankable is to reach out to somebody like Greg or myself and let us help you work through it. Let's figure it out and then implement it. So we create the plan, we implement it. It takes a little time sometimes. So anyway, I hope that answers it, but I see we've run way over time, Greg.
Yeah, we need to wrap it up.
Okay, well, if that's it, everybody, thank you so much for attending. A recording of this will be available. Am I correct, Greg?
Yes, we're going to send a recording out to everybody that asked it. I know we had a little bit of technical difficulties, so if we lost anybody in the beginning, we'll make sure everybody has a chance to download it. And if you know any other physician friends that would be interested, you can, of course, feel free to forward the video to them as well. So we're at your disposal and would love to work with you. And like I said, we're nationwide. Our contacts are nationwide. Our partners are nationwide. And we're ready to serve you in any way that we can.